We're live.
That's it.
Here we are.
Oh,
That's it.
There we
We're
go.
here. What's up, everybody? Happy Friday. Welcome to Real Estate Unwrapped.
Unwrapped, yeah.
All right, we are
big things
here
happening.
in town. So as we let it all kind of, I guess, start and kick off.
Yes.
It's been a crazy week, Gigi.
I know. It's not over yet. Actually, it's going to be another next week. It's going to be as crazy, but it's crazy is good. I like that. At least it's not boring. All right. Good morning
That's
to
true.
one person that is just tuning in.
Good morning to the one person. You gotta stop saying that, Gigi. We're about to have 100 people tune in.
I know, but people are just
Good
trickling in. I'm super excited. I hope Israel can make it. Israel is still in Florida, so I hope he can. He's doing a whole bunch of personal stuff, and I hope he can jump in and join us. Because today is pretty exciting. We all know, hi Faith. We all know that this market is a little bit crazy. A lot of buyers are put off, and sometimes they don't even know what they can do. And we have a master loan officer in our midst right now that can really help us break down some of what is available for buyers. And look who's here.
Look at this
Hi
guy.
Israel. Let me just stop sharing our flyer. This is great.
Hey guys.
Hi, good.
What's up, bro? Look at this guy. Look at this guy. He's all sunshine and rainbows over here. This guy, you still in Florida?
I'm still in Florida. I'll be here for another 2 more days, and
good. Enjoy. Oh,
I think I might have to. I think I'm getting to that point of being a snowbird. I might have to do that.
Okay.
Yeah,
All
trying
right.
to run away from this.
Yeah, I know. So without any further ado, guys, I think we have Bryan Cohen in the green room, and I'm super excited because we're gonna give you hours of golden nuggets. All right.
Chicken nuggets, golden chicken nuggets.
Ed, do you want to get him in?
Yeah, so we're gonna bring Bryan Cohen up. Bryan, welcome to our live, brother.
Thank you for having. Thank you. I'm excited to be here, guys. Really looking forward to this.
Yeah,
I really am.
We're excited too because
I wouldn't mind being a snowbird as well. So I can't do the snow anymore. What's up, guys? What's up, world?
Oh, damn, it's amazing. I just want to thank you yesterday also. I don't know if you were you there, Ed? You weren't there.
No, I
Bryan
wasn't, unfortunately.
and Juan did a banging role play for the mortgage pre-approval, because sometimes it's good for the agents to get in the shoes of their consumer, And for me, my advice to all the agents we work with is get yourself pre-approved. Even if you don't own a house yet, get yourself pre-approved by one of our preferred lender. Be on the way to homeownership. Even if it's going to take you 2-3 years, who cares? At least you get a plan. You know where you're standing right now, and you know what you need to do. So get pre-approved when you're in this business.
Yes, let me say it again. This was a role play for pre-approval, guys. We just role play for pre-approval.
No, no, Bryan, we lost you.
Back.
I advise all realtors to sit with their loan officers and get pre-approved.
Yeah, that's what I always do. This, I wanna shout out Maria Alcivar, which I remember got pre-approved a couple of years ago, and she knew she was 1 year away from being able to purchase at that time, and she busted her butt and did anything she could and got into her first co-op. And you did the same thing. You just busted your butt. You got pre-approved. You just busted your butt and made it happen. And look at this. Now you got... Yeah, that's what it's all about.
It's a beautiful thing. That's what it's about, guys. Remember, owning a home is a luxury. Sometimes you got to sacrifice and you have to game plan real early. So as long as you have the thought of home ownership, sit down with your loan officer, your realtor of choice, and really understand what it's going to take, that sacrifice, whether it's a year, 2 years, or 5 years down the road. Understand it today.
Yeah. That's what it is. The big picture is homeownership. It changes lives, when you're going to have kids, I was reading some reports that actually kids that lives in a home that is owned by their parents are doing actually twice better than the other kids in school because they have this stability. They have a home that is there. They don't have to move like every other year to another rental and stuff like that. So it does a lot, you know. It does a lot. Even if you live in a area where they say, "Oh, the school is not that great," still it's very, very important. The stability for the kids, psychologically, the development, everything. I mean, it's pretty amazing. Anyway, so today's topic is basically, let's talk about what is available for the consumer, for the buyers, people, you know, getting pre-approved and for a mortgage. What are their options? What sellers concessions are out there? What are the buyer incentives? Let's just jump into that and see what we can. Let's see what we can get.
I thought we were gonna go with 21 questions for Bryan, and we were just gonna like, probe him, like, yo, the interest rate and this and that. And
the interest rate is interest rate. We can't change that.
Yeah.
That's it.
No, that's a great segue. We can't control that, guys.
Right.
But what we can control is being creative to weather that storm, to be prepared to weather this storm, right? And a seller's concession is something that a lot of people are going to hear of moving forward. That's an assist from the seller, okay? Let's say the seller is listing the property at $600,000 and they're giving the buyer a 3% seller's concession. That means the seller is going to net $18,000 less. Better than a price reduction because it's more beneficial to the buyer and the seller. And then the buyer has their choice of what they want to do with the concession. That's the best part. I love giving the options to the buyers, right? Instead of just saying, hey, no, you have to do it this way. No, you have 3 options. Here are the options. Here are the pros and cons of each option. Which one makes the most sense for you and your family? Those are the questions that we're asking, right? A concession can be used to pay for closing costs, right?
Which is the most common.
Which is the most common. Or they could say, hey, you know what? My payment's about $400 or $500 more than I thought it was going to be. I'm going to take that concession and put it into the bank. And every month I'm going to take some money out of that concession for the first couple of years until it runs out and offset my monthly payment until I'm going to be able to refinance. Okay. I wish I had the crystal ball and I could say everyone's going to be able to refinance in 2-3 years, but that's what the industry's calling for. Again, it's not a crystal ball. It's not a fact. It's just an assumption. Or there's a great program that's been around for a long time, but you're hearing more and more of it today. That's called a 2-1 buy down. Okay. So 2% of your loan amount, not your purchase price, guys. That's where it gets confusing for a lot of people. It's not off of your purchase price, off of your loan amount. So if your loan amount is $500,000, 1 percentage point is $5K. So 2 percentage points would be $10K. Okay. This is something that a seller is going to put into escrow. All right. It cannot come from the buyer. It's a concession from the seller. Let's say going market is 7.25%. When you close that first year, if this 2-for-1 buy down happens, you could have a 5.25 interest rate for the first 12 months. For the next 12 months, you would go up to 6.25. On the third year, you would go back to the original note of 7.25 for the remainder life of the loan. What everyone's thinking, like I said earlier, is that you're going to be able to refinance at that point, okay? So this allows the buyers to take advantage of a house price today with a little lower of an interest rate of starting off. So they could put themselves in a better position today and then hope to be able to refinance in the next couple of years. Let's just say rates do come back down in 6 months, 12 months, 18 months before that 24-month hits, right? Whatever money's left in escrow at that point is credited to the buyer during their refinance process. So that money doesn't go up in smoke. It's still there. It's still credited. So if there's $3,000 left and their closing costs for the refinance is $9,000,
covered,
then they only owe $6,000, you know, so that money's credited back. All right.
Good.
Options. Again, I saved a couple of deals recently by getting a concession and the clients were comfortable of putting that money on the side and offsetting their payments for the first couple of years. That's where they were more comfortable because they were already prepared to do their closing costs, and they were already prepared for their down payment. They just weren't prepared for the $450 difference in payment. So they took that money that they got in the concession, and they're going to use that monthly to offset that $450.
Okay.
So that's what's interesting today.
So
about
can
concessions.
I ask? It might sound stupid question, but I know for the public out there, because I know we have non-real estate professionals, because everything is broadcasted from my private Facebook profile. So I'm getting my sister and my nieces to even listen to this overseas. But anyway, is this 2-1 buy down, any sellers concessions are available to buyers no matter what loan programs they fit into it? It has nothing to do with their credit score or debt to income ratio or anything. Am I correct?
Correct.
All right, good. So anything like as an agent, what advice do you give for an agent who's working with you and a buyer and know that those interest rates are pretty high? What would you advise the agent to do when actually placing the offer? Would you?
Great question. I think the initial offer has to be written up with this seller's concession involved, right? Where you're listed for $600,000, we're going to give you your $600,000, but we want a 3% concession in that. Okay.
Right.
And what that's going to do, just in easy terms, guys, that's going to benefit again buyer and seller. If a seller does that, instead of price reducing their house from 600 to 525, 530 to capture the clients that are looking for that comfortable payment, they could give that concession and do more justice to the buyer with the concession by lowering the price by $75,000.
Can
you net more money?
I have a follow-up question on this. Can you stack up? Because I remember, I mean, when I haven't done concessions in years now, but can you stack up the 2-1 buy down rate plus an extra help on the closing costs? Is that possible? Because I know it was possible to do up to 6% seller's concession.
Correct. You could do on all government loans, FHA, VA, you could do up to 6%.
Okay.
If you're doing 10% down or less on a conventional loan, you could only do a 3% concession. But if you're doing 15%, 20% of conventional, you could go up to that 6% threshold as well.
All right. So it is very important basically to work with a knowledgeable, and I'm going to stress it again, work with a knowledgeable mortgage professional that can guide us as real estate agent on how we're going to structure the offer for our sellers. So now I don't think we can do the guessing game. We just have to consult with you guys before we even put the offer in.
Definitely. Unfortunately, guys, we're speaking to clients 5, 6, 7, 8, 9, 10 o'clock on a weeknight, and then the next morning the rate's totally different than we spoke to them about the night before. That's the game that we're in right now, unfortunately. Another great program I wanted to throw out there was Sony May. It's a New York State product. Interest rates are still in the 6s. Okay. Again, it's not the easiest qualification. There's income restrictions, but if you do qualify for it, it's a great product in the market that we're in today. And we are a preferred lender for Sony May. There are only 7 other banks in New York State that do Sony May. We are one of them.
Because I know a lot of people don't even want, a lot of loan officers don't even want to touch it. I've heard that there is so much paperwork.
And not enough pay.
Not enough pay. Bryan, where are you?
It's all right. Real quick, guys. Hold on. Real quick.
Yeah.
So if you're tuning in just now, we're just talking about seller's concession, buyer incentives, and how to tame the high
here
interest
it is.
rate.
It's back.
And if you have any questions pertaining to this or any questions relating to mortgage, definitely ask it. Put it in the chat. That way we can ask Bryan all together. There's only so many questions we can ask Bryan, but if you have a specific question, throw it in the chat box. We'll read it out to Bryan and get them answers for you. All right. But go ahead.
Let's go back with you can hear us, Bryan, right? Yeah. All
I'm
right.
good.
So with Sunny May, even though you have income restrictions, but I'm always reading the threshold per family because there's number of people in the household and stuff like that. For the 5 boroughs and Nassau County, it's pretty high, I would say.
Yes,
It's not
it is.
like, yeah.
185 total income for a couple, for 2 borrowers, let's say.
So this is pretty much, it's more than the average of what we're seeing out there, like not everybody
Correct.
has combined income of 185. I wish,
Correct.
but yeah.
And the reason being, and you guys know me by now, I tell you how it is. Most loan offers don't like to write this loan because they're getting paid less and it's more paperwork. Us at the home team, we don't do business that way. If the loan makes sense for the client and it's the best option for them, regardless of what our commission will be, they're going to get that loan. So
I totally agree with you. Even as a real estate agent, I sometimes do deals where my commission payout is going to be less than what we're offering to the buyer's broker. And if it's just to make that deal work, and then we know that somewhat, even without expecting it, you'll get some referral back from that seller, from those buyers, because they were very happy with the deal. That's all matters,
Definitely.
really at the end. Yeah. I get it. So for the Sonny May, do they have a lot of restrictions as far as credit score? We said income. Are they like sort of stingy on the credit score? Do they want something more like a conventional loan credit score?
They're going to want to see a 640 FICO score versus on FHA, we could go down to 580. And that's why I always tell the real estate community or anybody who's looking to buy, it's never too early to get in front of your lender so they could run your credit. They could put it through a simulator, and they have time to help advise and get you to a much better point in qualification. Credit score is extremely, extremely important in the market that we're in today. 10 points here or 15 points here could be a difference of a 0.5 percentage point on a loan. So the earlier you're sitting down with a professional to go over it, the better position you're going to put you and your family in.
Yeah, because we keep on having offers that are accepted and the buyers have to back out because they are no longer approved. So imagine for FHA, if they have a credit score that is a little bit lower, below 600, I mean, how do you even qualify? Because you have to up the qualifying rate. You already have to go up to make sure it catches up with the market. So what's the process there? What do you do?
The process is that, when someone does not have the best credit out there, I always advise all parties involved that any little wrinkle that comes up could take us out of qualification, whether that be, they open up another credit card or they miss a payment. Someone who has an 800 FICO score and they miss a payment, you're only going to go down. You'll be in the 700 still, right? If you're starting with someone at that 590 FICO, and they do what I'm personally guilty of, and it happened to me 7 years ago. I missed the Macy's payment and my credit score dropped 50 points. And it wasn't because I didn't want to pay the bill. It just life happened and it was unfortunate. But these things do happen and they do come up in the qualification, right? Definitely. So we just try to communicate with all parties, especially the buyers, and let them know, what could happen if something gets missed. But other than that, FHA, the qualifications, we could go to a higher debt to income ratio than on the conventional. So that helps us with all of the FHA
It's
buyers.
a little bit, to me, it's a little bit risky on single family homes. Yesterday we were talking about multiple, like multi-family home. And I want you to repeat this, because we were talking about this current environment where people are purchasing homes, but they need to purchase as family. We've seen co-borrowers or even people, what you call that, guarantors, like 3-4 people on a loan, and it gets really, really like dicey and messy. If something happened to one, then nothing works.
Correct. But remember, the more people on the loan, the more issues that could come up, right? That's 4 times the amount of paperwork, 4 times the time to underwrite that paperwork, to process that paperwork, and then 4 times as much of an issue to come back when we overview all the paperwork. But I'm seeing more and more contracts on one families come in where you have two families moving into a property to make it affordable for the time being. I think multi-families are going to be probably the best homes in the near future, the next 12, 24 months for somebody to purchase. Remember, multifamilies in New York are usually anywhere between $100,000 and $200,000 more than
the
a
single,
typical one family. Again, guys, this is average, not guaranteed, just an average. Let's say it's $200,000 more in certain areas, right? Your payment's only going to be $1,200, $1,300, $1,400 more than the one family, but you're going to be coming in with 26, 28, 2,900 in rent. You're still going to be plus in that scenario.
Yeah,
so multi-families are a great thing, especially for our first-time home buyers, especially for them.
Right. But can you purchase a 3-family with a lower down payment?
Oh, definitely. Great question. 1 to 4 family homes, you could do as little as 3.5% as a down payment.
Yeah, I'm not a fan of 4-family homes when you just start a purchase, when you're your first time home buyer, because family homes tend to have very much higher taxes than the 3-family. It just jumps off like so much more. So I mean, to me, I would just go from the 2 and 3. This would be like the max as a brand new buyer. Otherwise
I'm
it
in
gets
agreement with you.
right.
In agreement with you.
Yeah.
It's just like those 4 borrowers, right? It gets tricky. Now you got 3 tenants. It gets a little trickier,
Right. But what can we do? I mean, like prices of properties went up so much. And even though we're doing good on the job market, it's still not good enough. And a lot of us have really no option to just need help from our family, and stuff like that. Yesterday you had mentioned something very, very interesting. I don't know, like how, buyers can also get helps from co-signers or co-borrower that are not going to be living in the property. Are there any things that they can be compliant with the laws and stuff like that can be done? Do you want to give us a couple of examples?
Definitely. 100%. So we could have what's called a non-occupant co-borrower, right? You're buying a home in Brooklyn. Your sister lives in North Carolina. And even with hitting your sister for her current mortgage and car payments and student loans, she still makes enough money where if we added her to the loan, that could help you get over that hump of qualification. So we could do non-occupant co-borrowers. And also, Gigi, while we're on that topic, I'd love to bring up, buyers, you could always get gifts for your down payments, right? Uncle, aunt, mom, daughter, parakeet, dog, whoever has the money to, help you with that gift, whatever it might be, as long as it's seasoned in the bank and, there's a paper trail to that money and it's not cash, it could always be used to help you towards maybe a buy down, maybe, a buy down of rate, maybe your closing costs, maybe your down payment. There's a bunch of different ways to, again, get creative with the down payment.
How much gift are you allowed?
There's no limit.
Can you get your whole down payment in gift?
You could get the whole thing down, the whole thing.
Even with your closing cost?
Even with your closing costs.
Wow, look at this. All right. I'm trying to read what...
So Bryan, while we're waiting for that, really quick.
Yes.
I mean, with the way the market is moving, with all the shift and everything, there's a lot of buyer's remorse happening right now. There's a lot of people that are losing out in offers. Do you suggest that they all, at this point right now, should just really revisit all of their mortgage professionals and see if there's other ways they can actually try to win these deals?
100%. I've been preaching that for a while at this point.
Yeah.
I think everyone needs to, and not even a phone call. We have to Zoom with the clients, meet in person, roll up our sleeves, and really get under the hood and understand what their true concerns are, what their vision is, where they want to be, and then really sit back and game plan and come up with an idea collectively. And I love even doing that with the real estate professional in the room as well. 2 great minds together helping one client is always better than one great mind. So
yeah,
I think that's always best.
I can attest to this. I mean, what is great with Bryan is on the pre-approval, he might seem a little bit lengthier than what you would get from other mortgage, loan officers I've seen, he's not going to issue you a pre-approval until you're going through the desk underwriting, correct?
Yes,
So you're going to go through
correct.
this thorough process and actually get a pre-approval that is a real pre-approval because it went through loan processing.
100%, guys.
Yeah.
Listen, we're in a crazy market. I've been doing this for the last 15 years. I've never issued a pre-approval without seeing all documentation. Last thing I want to do is waste our clients' time, waste your time, and then a potential seller for you in the future's time. So even if we take 24 hours, 48 hours, a little extra in the beginning, it's going to save everybody time and headache in the long haul. So that's what I like to do from day one.
Yeah. Nice. So lastly, I don't know. I have another
quick,
question.
Gigi. Hold on. Before you go with that. So we got a question for you, Bryan. Can you repeat again the different choices we can give buyers to use the seller concession?
Perfect.
Of course. Great. So you could do the traditional seller concession, seller credit, whatever you want to slice it, however you want to say it, towards your closing costs. Okay. That's always an option that's been around and been used forever. You can use it by saying, hey, you know what? I was comfortable paying out of pocket the down payment and the closing costs. I was already prepared for that. I've been shopping for a year. I've had that money on the side. I'm comfortable. But where I'm not comfortable is this extra $400 a month in payment from something that I was looking at last year. So that's $4,800. That's $4,800 a year. So if you were able to negotiate a $9,600 credit from your seller, you could basically have on the side prepaid that $400 a month for the next 24 months. So you see a lot of that happening right now, a lot of negotiations for that. Or you could do what's called a 2-1 buy down, where the seller is giving 2% of the
loan amount.
Okay, it's going into escrow, and then you're reducing your current market rate by 2% for the first year, by 1% for the second year, and then on the third year, it goes back to the original note that you signed from day one. Whatever money's left in escrow will get refunded back to you or credited to you towards your closing costs for your refinance down the road when that happens. This has to come from the seller. The buyer cannot put the money in escrow for this. The seller must do so.
Bryan, real quick, this is not the same as a buyer trying to buy points, right?
No.
Okay.
Right. So what about one more thing we probably just forgot? I don't want to go too lengthy on that. Or a little bit of advice on those adjustable rate mortgages, because to me that seems like the big scary bad wolf. It's like, oh my god, adjustable rates, and then it balloons up at the end, and it's like, oh no.
You're showing our age, Gigi. You're showing our age. Yeah. Arms are a scary topic at most dinner tables, guys.
I know.
But arms today, listen, arms are a product that's been around forever. If they're used correctly, they're a great product. And then it's all about digging back and asking the right questions to your buyer. What's the plan? Where are you going? What's going on? Arms are where you could start with a lower introductory rate for a set period of time. There's a 3-year arm, a 5-year arm, a 7-year arm, and a 10-year arm. Adjustable rate mortgage, guys, that's what it means, an arm, okay? So the first 3 years or the first 5, 7, or 10, your loan would be fixed at that rate. That would be your principal and interest payment for that length of time. And then it will adjust thereafter. So at that point, you're going to have to refinance. You will have to refinance with an ARM mortgage. What I'm seeing today, and G, I knew you were asking this question, so I did prepare. I'm not gonna front that I didn't. The jumbo loan market today is where the ARMs are being very aggressive.
Okay.
On your typical $700,000 one-family home with 5%, 10%, 20% down, the ARMs are not as attractive as that $1.1 million purchase with 20% down. Okay. So one size doesn't fit all, unfortunately. But what my team is trained to do when we take in an application, we are pricing it out with every loan option under the sun, and an ARM is one of them. So if it does come back in the system that it makes sense for the client, that will be an option that we will explain again, the pros and cons. I love going over the pros and cons. And if it makes sense for the client at that point, that's what we'll take and we'll lock in and go with.
Wow.
Very nice.
Amazing. So I don't think we need to expand too much on all those programs. What we can do once we sign off from this this live, we can actually post in the comments, with your permission, Bryan's information. Of course, with your mortgage association loan number and all that, so we can post that in all the different platforms we have, because I think now we're broadcasting to 5 different platforms worldwide.
Beautiful.
All right.
Love it.
This is amazing.
I want back. This was fun.
Oh my God! Yes.
We appreciate you tuning in, brother. It was a pleasure having you.
This is a gem. This is better than the golden nugget. This is a treasure. Yeah. Thank you so much.
Love it.
Love it. Market's crazy, but Brian, we appreciate you, brother.
Brian.
Thanks for tuning in, man.
Thank you, guys. Have a great weekend.
You
Take
too.
care.
Enjoy your weekend.
You too, brother. Take care.
Bye.
Bye. Woo!
So there you have it, folks.
Amazing.
Let's start saving deals. We got to start saving deals, man. There's deals that are falling apart, and they need the right agent to guide them to the right lender so that we can put the correct package together and close that deal out.
This is not the environment we were in 6 months ago, a year ago, 2 years ago, where you cannot just say, oh, pre-approval and you're good, it's good to go because the rates are 2.75. You're going to have to be, as a real estate professional, a little bit more hands-on and communicating with the mortgage professional. I would advise to actually ally with, several mortgage professionals that you know and trust, and actually can guide your buyers towards the best deal possible for them. You can't let just the buyer choose any kind of mortgage professional without, I think you need to be a little bit more hands-on. We really need to be the advisors. We need to be the source of certainty in this uncertain time.
No, it's 100% true. And if a lender tells you that it's too much paperwork and it doesn't pay enough, run, because that's not what we're in. We're not, like, I know we're here to make money. Don't get me wrong. I know we're here to make money, but at the end of the day, you have to look past that one client, right? Yeah. Maybe you're not going to break the bank with that one person right now, but what if you do your job? What if you actually got them to the closing table with the proper loan and they're there excited? Guess what? They're going to refer you to someone else.
They're going to come back. Yeah.
Absolutely.
And you take a little bit less commission that time or whatever it is, or whatever you structure, it does not matter. You made that person happy. They'll be your friends for life. You're going to help 100%. Them for life. You got to be there. This is our job.
They're always going to come back to you for that. You know what I mean? And I want you guys to know that you're on fire.
You guys, so thank you. We love you guys. Like, we've had so much viewership lately. It's amazing. We really, really love it. Love it.
We truly appreciate everyone for tuning in.
Let's do a reminder before we can post the official poster next week.
Ooh.
Real Estate Unwrapped presents their first in-person business planning session called 2023 Takeover, and it's going to be in partnership with Agent Toolbox. Bryan is also a sponsor for this, like we're so
one of our sponsors. Yeah.
So we're going to be live in person at the Adria Hotel in Bayside on December 1st, 9:30 to 12:30. We're actually working, and this is the little cherry on top, we're working on getting you guys free CE credits for that. We're waiting for the approval from the Department of State. We keep on repeating it because we want to bring it to existence. It's not sure, but it's gonna come through.
We're gonna make it happen some way, somehow. I don't know, but it's happening.
Yeah.
And we're gonna get free CE credit, 3 hours, 3 credit courses.
It's amazing. Yeah.
It's gonna go down. We're gonna have a blast. We're gonna get together. We're gonna learn, and we're gonna have some fun. So
and we're gonna have breakfast. We're gonna have free breakfast. We forgot the best part. Amazing. All right, guys.
Everybody loves Steve.
All right.
All right,
Israel,
guys. Thanks for tuning in.
We can't
We
wait
miss
to
you.
see
You
you
guys
again
too.
next week. Bye.
Miss you, man.
Yes, sir.
Come back. Yo, wait, hold on, man. Most valuable
Oh,
host.
who's that? Who's the
Who's
most
the
valuable-
MVP?
Who's
Yo, we're gonna shout out our boy Julio.
Oh,
Julio came through with some questions. I can't say that I've seen Julio on here before, but Julio, thanks for tuning in. All right, you are today's MVP. So
all right.
thanks for
Congrats,
tuning in.
guy. Thank
All
you
right.
so
Appreciate it.
much. Bye.
All right, guys.
See you guys
Enjoy.
later.
Take care. Bye-bye now.
Have a great day.